to people is I'll let people come in on the lobby, and then if they want to raise a question, raise a hand. I'll open up the chat room as well, and we can usually do Q&A as we go, or do a session at the end, really. So I want you to enjoy it. I want you to get something out of it. At the end, we usually ask you to stay on for a minute at the very, very end, just to do a sort of social media 1 minute sort of summary, and then try and promote the theme and try and promote you. So it's all good. So what I'll do is I'll start bringing people in, and then we'll leave it a minute or two, and then we'll start at about 10:20, 10:32, 10:33, something like that. So.
And you can see my screen, all right?
I can see you. I can see your presentation. It's all looking good. Any questions before we start?
No, all sounds great. Look forward to it. Definitely questions throughout. So I'll suggest that.
Yeah. I'll start admitting people. So. Good morning, Ian. Good morning, Derek. Good morning, Edward. Good morning, another Ian. Good morning, Jim. Morning, Paul.
Morning.
Morning, Peter. Thank you very much for joining this morning's coffee morning with the wonderful Ed Micklem. If you've just joined, if you could go on mute, please, that would be great, just to cut out any background noise. That'd be wonderful. As usual, we'll probably give it another minute or two just to get some stragglers on board. Before we start, we are recording, everybody, by the way. So Jim, Ian, thumbs up. Everybody's happy to record. Thank you very much. That's good. So we'll record, and we'll, as usual, post a video on the media tab this afternoon on Pension Playpen, and get that up and running. Really appreciate everybody joining this morning on what I think is going to be a very interesting presentation on stewardship and voting, which I think is really, really important in our industry. So for those of you that don't know me, I'm Steve Goddard, and I'm CEO of Pension Playpen, and we run these events every week on a Tuesday. Very pleased that a few regulars have come back, which is great. So thanks for joining as well. And that's really cool. If you've just joined, if you could go on mute, Maggie, that would be brilliant. Thanks for joining. And we are recording. So we'll leave it another minute, Ed, if that's all right. And I'll monitor the lobby and then leave you to present. Good morning, JQ. Thanks for joining. If you could go on mute, JQ, that'd be great, just to cut out any background noise. And that'd be good. Okay, so it's now 10:33. Ed Micklem of Tumelo, I'll pass over to you. I'll mute and I'll monitor the lobby, and the chat room will open up if anybody wants to make any comments in the chat, or if you want to raise a hand and ask a question at any point, then please do. So Ed, over to you.
Thanks, Steve. Hello, everyone. Good morning. Great to be here today. I can see a few familiar faces. Maggie, you're very big on my screen at the moment, so good to see you. Hope you're well. So my name's Ed. I'm from Tumelo. I am the VP and Head of Strategic Partnerships. And really what I want to talk to you about today is giving investors a voice on stewardship, or probably more accurately, giving a broader demographic investors a view on stewardship. And when we're talking about stewardship, I guess very high level, we're talking about the ability for a shareholder to influence the behaviors of that company, particularly large listed companies. So that's a kind of like high level intro. Hopefully my slides. There we go. So plan for today. So I'm going to kick off just with a bit of a intro into Tumelo. I guess the kind of formation of Tumelo, a bit of the background, where we've been, where we are today, and then the future, where we're hopefully heading. Hopefully that kind of lays the foundations and just gives a kind of a bit of a base to have a further conversation and discussion on today. I'm going to talk briefly about our member platform. So I don't know if anybody on the call has come across Tumelo previously, but if you have, it might be largely based on the work that we've done for the pension members of schemes. So we have for some time been working with some of the largest UK pension providers to give members the ability to have a voice on particularly ESG issues, so shareholder proposals that are coming up at AGMs. So I'll talk a little bit about that. But the majority of today's session I want to spend talking about pass-through voting and expression of wish for asset owners and institutional investors. These are two fairly newly coined terms. So sometimes pass-through voting is referred to as split voting in the UK. pass-through voting is, I guess, the American equivalent. An expression of wish in this sense is talking about the ability for a asset owner or an underlying beneficiary of a scheme to place an expression of wish through to either their trustees or their fund managers about how they would like stewardship to be conducted. It is not, and I don't know why, I think Maggie and I spoke about this previously, I don't know why the DWP coined the term expression of wish for that purpose, when expression of wish to me, and I'm sure to many of you, has previously meant the nomination of death beneficiaries within a pension scheme. But for whatever reason, that is the term that they've decided to use. So when I'm talking about expression of wish today, it is very much about the ability for a shareholder to express their wishes, to talk about the way in which they would like something to happen. I'll give a little bit of an overview of kind of regulation and some market insight. So I've spent certainly the last kind of 6 or 7 months traveling around, yes, the UK, but also Europe and internationally across the States and Canada last week, talking to asset owners globally to understand what their views on stewardship and the processes are, some of the struggles that they're having, and some of the ways that hopefully we can alleviate some of those pressures. And then finally talk a bit about kind of real world voting. So we're just kind of coming to the tail end of the 2023 voting season. So it'd be interesting to talk about some of the big votes that came out there, and some of the ways that asset owners who do retain the ability to vote at the moment have been voting on those issues. But my big kind of request is that people do put up their hand, jump in, ask questions as we go through this session. A lot of this stuff is quite new, and so I'm really intrigued to hear your own experiences and your views on some of these things. It is my first pensions playpen, so please be nice, but challenge is always great, and I'd love to have a discussion rather than you just have to listen to my voice for the next 20 minutes or so. So if that's all okay, I'll just start with a bit of background on Tumelo. So we were effectively founded out of a Cambridge University project. So Georgia, who is our CEO, was studying at Cambridge University, and I do always feel slightly embarrassed when I tell this story because I certainly wasn't asking questions of the trustees of my university endowment fund when I was at university, but Georgia was, and great that she was having those thoughts even kind of early on in her educational experience. But the question she was asking the University Endowment Fund, which represents about 6 billion of assets for the future beneficiaries of the university, for research projects, etc., was which companies is the endowment fund invested into? So we know that you use fund managers to invest the money. What are the underlying companies that the university is investing into? And the trustees at the time found it very difficult to answer that question. And things have moved on a little bit in terms of transparency, but it took some time to get the answer to that question. They basically started a campaign. Some other universities got involved as well, and Harvard, Yale, some other UK universities, and really wanted to better understand where is the money effectively on behalf of us as beneficiaries being invested. At the time, they were very interested in whether they were investing into oil and gas companies. And so this really kind of planted the seed, started the thought process of, one, transparency, but then when we know which companies we're invested into, how do we feel about the fact that these funds are invested into, whatever company it might be, but oil and gas companies is an obvious example. And Georgia began to look at the various different opportunities for an investor at that point. So do we divest if we're not happy with the companies that we're invested in, or do we engage and use stewardship as the way in which to have an influence over the way those companies, so an oil and gas company, for instance, could potentially transition towards a net zero environment? So Georgia graduated, went off and did various other things, but this kind of seed had been planted. And really that kind of brings us to where we are today, which is a number of years later, but as I guess moved on from being a startup into a scale up. So we've raised just over 25 million in funding from various different investors, but including the Treasury in the US, Fidelity International, and Legal & General here in the UK. We've got offices in Bristol, where I'm based, London, and also over in New York now, as we'll hopefully touch upon that in the questions, but as discussions around voting in the US market become ever more kind of political and interesting. We've also got a number of partnerships set up. So we partnered with the likes of Glass Lewis and Perk. So they are proxy advisor firms who in effect provide recommendations to fund managers and asset owners on how they believe the votes that are taking place at AGMs should be cast. They have various different policies, so it might be a climate policy, it might be a corporate governance policy, but they support those fund managers and asset owners in placing those votes that come up at the AGMs. So that's kind of where we are at the moment. And I did have a slide here. Georgia would kill me if she saw the slide with her face quite so large on the screen. But I had a slide here where we had a number of kind of different articles that Tumelo has been featured in the news recently. But I thought this recent article in Forbes was kind of the probably kind of epitomised all of those different conversations that we've been having over the last 4 or 5 years, and the point to which we've got to today, in that shareholder voting, shareholder democracy has become an issue that is being discussed on a much wider scale than just with ourselves at Tumelo, but also across the much wider market. And the title of this article is "Most Investors Are Passive Bystanders in the Boardroom. Tumelo wants to get them involved." And that is very true. Most investors are just bystanders in this process. Voting in itself is not a new concept, that's for sure. So if you invest directly in a company, you invest X amount of pounds, that gets you X amount of shares relative to the size of your investment. And for very large asset owners in the UK, so Church of England would be a good example, University Superannuation Scheme would be an example, Nest would be a good example, where you have very large asset owners who invest through what we call a segregated mandate. They have the ability to retain the voting rights which are associated with that invested capital. Conversely, if you're an investor who uses a pooled fund, a mutual fund, for instance, an ETF, where you have lots of different investors cumulatively investing into one vehicle, you lose those voting rights. Instead, those voting rights are typically delegated to the underlying fund manager. Yeah, as Steve said, do raise your hand if you'd like to ask any questions on that. So voting isn't a new thing. It's been taking place already, but the piece of that puzzle that we're really interested in is where you have these investors investing into a pooled fund environment and they've lost that ability to vote. And we know as the prevalence of pooled funds, ETFs, etc., has grown, more and more of the invested capital in the UK is invested into pooled funds, and therefore less and less shareholders are having the opportunity to vote at the AGMs that are taking place of those companies in which they are invested. So why do we think the democratization of voting is important? Well, if you think about that investor capital going into pooled funds environments, we now have very, very large corporate global companies. So if you think, who are good examples? Amazon, Tesla, Exxon, huge global corporates. And you could argue, I think, that some of these companies have power, akin to a small local government, probably, given the size and scale of them. And then you have shareholders voting into pooled funds who own an allocated part of those different companies. And the great majority of that capital is invested now into 3 very large fund managers. So BlackRock, State Street, or SSGA as they're sometimes known, and Vanguard. So 3 massive US-based fund managers. And at the moment, those 3 fund managers control about 25% of the voting rights across the S&P 500, so the biggest 500 corporate companies in America. And experts predict that influence is going to grow over the course of the coming years to about 40% by the mid-2030s. So this really gets to the position where you have 3 very large global fund managers who have become the biggest enactors of corporate governance globally. Now, the question, I guess, that we're asking is, if we believe that stewardship and shareholder democracy is an important thing, is it right that so much of that voting capital is allocated with only 3 fund managers? And again, hopefully in the Q&A we can talk a little bit about the US, but we've definitely got a situation where big state pension funds are starting to look at BlackRock and say, we're either disappointed because they're not voting progressively enough, or in some situations, being very frank about it, we think that BlackRock are being too progressive in their voting, they're caring too much about climate change, and they're not thinking about their fiduciary responsibility, which is to generate returns for their members. So believe it or not, we've got, it's in the Forbes article, actually, we've got a case where some pension schemes are saying BlackRock are too woke, which is kind of an ironic claim potentially, but we'll go into that in the Q&A, hopefully. So, as I said, we've got 2 different parts of Tumelo. So we've got our platform, which we provide to the underlying members of pension schemes. So we've launched in the UK with Standard Life, with Fidelity, and with Cushion. And this example on the screen is part of an advertising campaign we ran with Cushion on the London Underground, which was really successful and really kind of exciting to see shareholder democracy being talked about in that type of environment. So the question is here, you're invested in big companies through your pension or ISA. Are you happy with how they're being run? Have your say. And on this example, it's should Amazon provide additional reporting on its gender and racial pay? And in effect, what we do is through various different means. So it might be through an app, it might be through our own platform, or it might be integrated into the provider's own investment platform or pension platform. We provide access to Tumelo, and we float the questions that are coming up at shareholder proposals that are coming up at these AGMs and ask the underlying members to vote on them. Before we can do that, we need to make them aware of the different companies that they own within that investment portfolio. So again, we know for the large majority of investors in pensions in the UK, they sit within the default fund. So they've been automatically enrolled. They've been put into a default fund. I used to work for a pension provider, so I'm very aware of the challenges that we have with engaging underlying members with their pensions. You know, I used to often ask pension members, who's your pension provider? And they can answer that question, let alone answer the question about which companies their money is invested into. But that's the kind of thing we want to bring to life. So a member can come into the platform, they can see that they're invested in the LNG Future World or whatever underlying fund it might be, and then they can click through and interrogate all of the different companies in which they are invested. And so I was too scared to do a kind of a live demo, just scared of technology today, but this is just a screenshot of the demo platform that we have. A member can come in, they can see that within that default fund, I own Microsoft, I own MasterCard, I own HSBC. They can interrogate that data, so search for specific companies of interest. They can click through, go through to the Wikipedia page or go through to the company page and find out a little bit more about that company. And really the idea here is back to kind of George's initial idea about Tumelo, is being really transparent about it's your capital, it's invested for your, you know, in this case, for your future retirement. And we should be transparent about the holdings that make up that fund. So rather than just having your top 10, you can now see all of the companies. They've seen all of the companies. They then get the ability to vote on these issues. So we float these shareholder proposals. So for in this instance, should Kroger report on the environmental impacts of using non-recyclable packaging? Now, we know that members are not going to want to necessarily vote on every proposal that comes up at every company that they hold. So we allow them to filter through based on criteria or issues that are really important to them. So I might say that for me, to use a kind of simple example, I'm really interested in climate change and I'm really interested in human rights. And therefore, when a proposal comes up and it's at an AGM of a company in which I'm invested that relates to one of those two themes, that's when I want to be notified of these issues, and that's when I want to have a say. So members vote on these issues, and then we collate all of that data and we pass the information through to two different groups. So one of which is the trustees of that scheme, and the second group is the underlying fund manager. And the data can be really, really interesting and give us loads of insight into the different preferences of those underlying members. But the impact of these votes is something that we're still learning a little bit about, right? So we work with a number of fund managers who take that data. They're super intrigued to understand what the views of their beneficiaries are. If you think about the UK Stewardship Code, Principle 6 talks about the requirement for an asset manager or an asset owner to understand the investment beliefs of their underlying beneficiaries. And so this is a way in which an asset owner can understand those beliefs. But once we pass those views through to the fund manager, what actually happens next with them? Well, some fund managers analyze them, they use them as another data point as part of their stewardship processes. But some of them, I think the honest answer is don't, or because it represents a very limited part of their capital, it feels like such a small representation of a small group, a small part of the overall stewardship processes that they're working, that this isn't formulating enough of a viewpoint to change the way in which they're actually going to place some of their votes. And because of that, or partly because of that, the second part of what Tumelo are doing is providing that same very similar functionality that we're talking about for underlying members of schemes, but for asset owners and institutional investors to place the votes. So if we think about the kind of flow of the voting power at the moment, we're asking the underlying members their views, and we're effectively passing that through to the fund managers who have delegated responsibility to place the votes at AGMs. And what I want to talk about next is how we then incorporate the views of trustees. And we've got a number of trustees on the call today. So the views of trustees who are investing in pooled funds, we can take the views of the underlying beneficiaries, incorporate that into their stewardship policies, and then vote themselves either through pass-through voting or expression of wish. So I've spoken quite a lot there. So I'm just going to pause for a quick second and see if there are any questions or clarifications that people would like me to touch on.
Yeah, we've got a question from Ian. Ian, do you want to unmute and ask your question?
Yeah. Thanks, Ed. Yeah, I'm quite interested in the trends of the ages of people who use Tumelo. I'm guessing because it's probably DC auto enrollment, it's quite younger, but I'd be interested to hear.
Yeah, so it's definitely broad. We are, depending on the way we've integrated with the provider, will dictate the type and quality of information that we can get on ages. So we use Google Analytics to pull information where we haven't gone through like a full integration process. So if somebody logs in with their email address and comes to us, we don't necessarily know exactly who they are unless we're integrated through SSO or through APIs. So we don't have data on all providers, but on the providers that we are integrated with, the peak are sub 35, as you would probably expect within that kind of DC environment. But then also, probably not that surprising when you think about it, we also have a later peak around 55, which I think is when, that typically, going back to my previous experience in corporate pensions, is when, people are starting to re-engage and think about this a little bit more as they're starting to track their, their route into decumulation. So yes, you're right that we have a peak in the kind of, millennial Gen Z kind of area, but certainly another kind of peak later on. So it's not definitive yet. As we progress into deeper integration with people like Fidelity, we'll have much clearer information on kind of, be able to give a more definitive answer to that type of question.
Thank you very much.
Thanks very much, Ed. Yeah, that's really good. Any other questions before we move on? Actually, I've got a question. I know JQ's on the call, who's an actuary. Where does this cross over? A lot of this is about DC, Master Trust, GPP, or whatever it is. Does any of this cross over into the DB space? What duties are on trustees in DB land? Have you come across some examples there, Ed?
Yeah, absolutely. So the way in which the scheme is structured, if their GPP is actually a slightly different situation, but wherever there's a trusteeship in place, whether it's a master trust, a DC own rules trust, a DB trust, the principles that I'm talking about today apply. So if we think about some of the big state pensions in the US, they're DB schemes. Think about some of the master trusts here in the UK, obviously being DC schemes that we're working with. And effectively, we're talking about the underlying allocation of assets. So if the assets are within a pooled fund and they're listed equities, then there are voting rights associated with them. I think it's fair to say that a lot of DB schemes that I've spoken to, because they have a decreasing allocation of listed equities within their portfolio, it feels like the kind of DC Master Trust spaces where this is a growing conversation, and in the DB world, it's probably a decreasing conversation, albeit, the timeframes that we're talking about with some of these large DB schemes are still pretty long.
Okay, Maggie, you've raised a hand. Do you want to make a point or ask a question?
Yeah, we've had a lot of conversations with Ed about this, but the AMNT, not my own scheme, but we hear a lot about small schemes that are told, "Oh, you're in pooled funds, you don't have a right to say anything about the way we vote." And I know there's quite a move for people to say, well, we do want to say how we vote because we've got views on things like climate change and stuff. So the expression of wish bit of the process, I think, is quite important still at that end of the market too. Yeah,
I would obviously agree entirely with that, Maggie. So I guess maybe that's probably a nice place to lead on to some of the regulatory conversation, the increased, I guess, dialogue about stewardship more broadly and how it can be enacted. So As I said, those big schemes that have the ability to vote have been doing so for some time. But when we think about the DWP and recent regulation, the first thing is probably the introduction of implementation statements back in 2019. And implementation statements are part of the scheme's statement of investment principles. So a scheme should be outlining what their key investment principles are, and then the implementation statement is an annual process which reflects back on that scheme year and talks about a number of different things, but also includes how their allocated fund managers have been voting at AGMs. And I think we're all in agreement that there are some issues with implementation statements. It's a good starting point, but ultimately most schemes either struggle to get the information from the underlying fund managers about the way in which they voted on particular issues, or they are only provided with information on what the fund manager has deemed to be a vote of significant interest. So rather than the asset owner having the ability to say, we're really interested in X, Y, and Z votes, instead it's the fund manager that's saying, here's the significant votes that we think are important, and you can publish them in your implementation statement. So I think there's probably a need for that process to flip on its head a little bit. But it is the first time, and it's the PLSA that formed the guidelines for this, that schemes are now required by the DWP to publish on an annual basis information about how stewardship processes are taking place. And then in 2020, we had the rather jazzily named, which I will try and pronounce correctly, Task Force for Pension Scheme Voting Implementation, the TPSVI report, which again was commissioned by the DWP. And it was where the phrase expression of wish was coined, but it looked at a whole kind of bunch of different issues. I know Maggie, again, AMNT were involved in the production of that report along with others. And the report was basically looking at the legalities of expression of wish. Is there an ability for asset owners who are investing in pooled funds to have a say, or is there some sort of legal issue which stops that happening? And the answer to that question is there's no legal reason why an asset owner can't express their opinion on how votes are placed. It talked a lot about the fragmentation between the views of asset owners and the way in which fund managers are voting on AGMs that are taking place. I think one of the big examples of that we hear often is around climate change, of course, but also, you know, animal welfare issues might be important. Biodiversity is a topic that we see a lot of the large UK master trusts becoming more and more focused upon. That's ditto across much of Europe, where breaking down climate change and environment into more singular issues is becoming of increasing importance. And then other kind of reports have come out. So one by the Occupational Pension Stewardship Council, and then the FCA formed a working group very recently to look at what data would be useful for asset owners to be able to better review the performance of their fund managers when it comes to voting on issues that are of particular importance to that asset owner. And Georgia and Tumelo were representatives on that working group, and I think that the kind of the outcomes have just been published or are soon to be published, but I can share those after this session. So if I talk a little bit now about the differences between pass-through voting and expression of wish. So I'll start actually with expression of wish. So expression of wish, be it for a underlying member or for a, let's use a master trust as an example of this, is the ability for them to communicate with their fund manager about the way in which they would like them to vote. And there are a number of schemes who are already doing this in various different guises. So some have taken things like the red line voting policy, and they've given that to the fund manager and said, this is how we expect you to vote within the parameters of this voting policy. Others have said, here are our kind of 3 key principles which we really care about, and we would like you to vote in accordance with this. So it might be about gender diversity on a board. If there's not 40% representation, they would like to vote against, as a very simple example. The issue with expression of wish, perhaps, is that fund managers are getting lots of disparate views from different people, and sometimes feeding back to those asset owners how they've taken on board those views and then voted in a way in accordance with those views is quite difficult. Pass-through voting is a slightly different solution, whereby rather than a asset owner saying this is how we would like you to vote on an issue, they are taking back that vote and formally placing the vote instead of the fund manager doing it on their behalf. And this is very, very new. And so the first product that was launched in this space was last year by BlackRock, which they call BlackRock Voting Choice. And this is giving institutional investors the ability to vote on these issues. Part of that is driven by the comment I made earlier about the political conversation in the US, where BlackRock are coming under pressure and they're saying, if you would like to vote in that way, we'll pass you back the vote and you can vote in whichever way you would like. A slightly different view on the word, I guess, than the reason for Tumelo being formed, but still a really important kind of step in that it is allowing for shareholder democracy. It's allowing for a wider collection of views to be implemented within the pass-through voting environment. I guess the other piece to kind of mention here is that the way in which pass-through voting is going to be conducted by asset owners is probably still up for debate in itself, in that some asset owners will vote only on a handful of proposals that are taking place at companies of specific issue of interest. So let's say we are a master trust and we've identified that our top 10 holdings by allocated assets, or potentially our top 10 holdings by carbon emissions, are the companies that we're going to take most interest in. And therefore, it's only votes at those specific companies that we want to be able to pass through our vote on. Other asset owners will take a different view and they'll say, we want to vote on all proposals at all companies held within our portfolio. And others probably going to find a kind of happy medium in between, depending on how they get on with this. So that's the kind of thought process that many have been going through. To kind of give some more examples of how pass-through voting is already being adopted. There's just some comments here about the kind of situation that we have at the moment, where those investing in pooled funds do not have the ability, or have not had the ability previously, to vote. But there are examples where asset owners who are currently voting in their seg mandates also hold pooled funds alongside. And so the local government pension schemes are a prime example of this. So I'm not kind of breaking any confidentiality here. A number of the LGPS schemes use PERC as their proxy advisor, or others use Hermes EOS as their proxy advisor. So where they have segregated mandates, they're using the policy recommendations from those proxy advisor, and those are applied to the votes. DWP are pushing asset owners to take greater ownership of the stewardship process, and the LGPS schemes are saying, well, great, we're doing that on our seg mandates, but we currently don't have the mechanism to be able to apply that same policy across all mandates, i.e. their pooled fund mandates. And so have been pushing back quite hard, and also pushing very hard on their fund managers to allow this to happen. So we're now working with an LGPS scheme in the UK and their underlying fund manager to enable them to vote on the same PERC policy across both their seg mandate and their pooled fund. So the diagrams are just a bit of a representation of this. So previously we had a situation where they had their seg mandate and they had their own voting policy applied to it. Then they had a number of different pooled funds with different fund managers, all of which had different policies applied to. In this new world, we have a situation where across the seg mandate and their different pooled funds, they have the same voting policy applied across all of them. Now, I guess the big question to ask then is, well, why is this important? And we've seen from a number of large asset owners in the UK, so Maria at Scottish Widows would be a good example of this. Valeria at Phoenix has talked about this, that where you have lots of different managers selected. So in Scottish Widows case, they've got 30 or so different fund managers selected. All of those differing managers are voting in different directions on the same proposal. So that's fine up until the point where Scottish Widows want to have a formulated opinion which they can report on as part of their implementation statement each year, to say, we care about these things and our fund managers are going to vote in alignment with those principles. It's impossible when you've got lots of different fund managers voting in lots of different ways. Effectively, those fund managers are cancelling out each other's votes. So let's say there's a common proposal, fund manager A votes one way, fund manager B votes the other direction. Scottish Widows capital has been neutralised on that vote, in effect. So this is research that we conducted on a master trust, and we looked across all of the different fund managers that they have appointed within that master trust, and found that we only looked at companies that are held across those same funds, of course, and 21% of the time there was misalignment between the way in which the fund managers were voting. Then we looked at their two biggest fund managers by allocated capital, and found that across fund manager 1 and fund manager 2, 56% of the time there was misalignment in the way in which they're voting. Now, we're not here to have an opinion one way or the other, but I guess we are asking that question. If you have a stated set of investment principles and you have two fund managers who are consistently voting in different directions to each other, like, are you happy with that? Are you comfortable with that? And I think the answer that we're consistently getting back is no. And what are the options available to an asset owner in that situation? Expression of wish and pass-through voting, we think, are two solutions which start to create a situation where you have more consistent voting across your fund managers. So we also looked at the role of proxy advisors, and this is a big conversation. Proxy advisors play a really important role for fund managers. So ISS and Glass Lewis are the two kind of biggest providers globally, but there are others like As You Sow and Perk, as I mentioned previously, who provide voting recommendations to fund managers and asset owners. So in this instance, we took that same master trust's voting records from their fund managers, and then we applied on top of it a different voting policy. So in this instance, we selected a climate policy developed by Glass Lewis. And again, we saw that fund manager 1 in the North America fund and the UK fund differed from the voting recommendations of the Glass Lewis climate policy 30% of the time. Now, we're looking retrospectively on this analysis, and the asset owner that we were conducting this research for hasn't selected the Glass Lewis climate policy, but we're using this as a representation of, if you had, this is the type of misalignment that you may have experienced. And so again, for that master trust who have very stated goals around becoming net zero, about becoming, really taking seriously the impact of their investments on the planet, it's an issue for them to see such high levels of misalignment versus that specific climate policy. Might just pause.
There's some really interesting statistics there, and again, I don't know whether Maggie wants to come in here as well, but yeah, I mean, how seriously are our trustees taking this? I mean, that sort of top two misalignment is actually stark, isn't it? Over 50%. I mean, that's just crazy, isn't it?
Yeah, I think.
I mean, how seriously? I mean, yeah. I mean, obviously your solutions are there, but I mean, Maggie, are you seeing trustees really wanting to change that situation?
I'm seeing trustees who are really frustrated that they're not being helped in this, and yeah, it is ridiculous if you find that your fund managers are voting in opposite sides on the same vote, and you've effectively tried to give them the same instruction. That if you're the asset owner, it feels completely wrong that you're not actually directing the vote. And the pooled funds thing is a real problem, but the fund managers too, who just either, whether the votes, when you say there's the misalignment, whether this is deliberate or whether actually it's lazy because they don't bother to place specific votes on certain things and just let things pass through of just voting with the company most of the time.
Yeah, I would agree with that. I think, so to your point specifically, Steve, I think are trustees really thinking about this? I think it's a growing conversation that has developed way more quickly than probably even we were expecting. So, the conversation around the ability to vote in pooled funds has been around for a very long time. And the emergence of BlackRock Voting Choice has probably accelerated discussion more quickly because it has now proven that this is possible. There was often pushback that voting in pooled funds is just not possible. That's not something that can work. It's technically too difficult for fund managers. It needed disruption, and hopefully Tumelo is playing a part in that disruption. But it is these types of statistics that are making trustees take this more seriously. And of course, we've got increasing regulation would be an overstatement, but increasing direction of travel from regulators to say, if you are going to be a signatory of the UK Stewardship Code, we need you to continuously demonstrate how you are effectively influencing stewardship amongst your portfolio. And at the moment, trustees have a very limited ability to do that in the current structure. So I think it's definitely a growing conversation. Of course, we're trying to influence that conversation and highlight some of these challenges. but I think the regulators are pushing for this as well. In the US, I think if I like really very broadly summarize continents, I mean, the US, the conversation is much more politically driven in how are companies serving their beneficiaries, but also how they're thinking about issues like climate change, and you have very polarized views on that. I was at the International Corporate Governance Network conference in Toronto last week, so meeting with some of the largest asset owners globally, who the majority of which can vote already because they have the structures to enable that to happen. And they were talking in Canada, yes, climate change was a big conversation, but also say on pay seems to be an issue that is stimulating a lot of debate there. So executive remuneration. And then across Europe, as I said earlier, we've got this real kind of deepening conversation about biodiversity, nature loss, individual aspects of the broader kind of climate change conversation that trustees are becoming more and more concerned with. And that's also true of the companies that some of those pension funds are run by. So if you take one of the large supermarkets, for instance, they have as a corporate business said, these are the issues that we really care about. And then as part of that analysis of their processes, they've also looked at their corporate company pension and they want to apply those same policies. And so voting has come up for discussion because that's a way in which they can act those views across their pension investments as well.
Yeah. Okay. JQ, I don't know if you had your hand raised and then dropped it again, but did you want to say something and
I've got a few
give your opinion?
Oh,
good.
I've got a few questions.
Right.
So I guess the first analytical one is clearly the asset owner in the pool fund space isn't the trustee initially; it's the asset manager. As far as those pooled assets are concerned, do they then weight the pass-through voting from the different groups of trustees and or other entities?
Do they weight them?
Assets? Do they weight them by asset volumes?
Yeah, exactly. Yeah. So we are, without getting into the kind of too much of the depths of the detail, we become the tabulator. So we work out on a given moment what the allocated assets are to each of those different investors within that pooled fund. The fund manager would conduct their voting process in exactly the same way as they do at the moment. And then we drop in once their votes have been placed and change the votes for the underlying investors in the fund. So if it's an expression of wish, it's slightly different, but in a pass-through vote, it's representative of the allocated assets.
Okay, and I guess one of the challenges you've got with DB is, by its very nature, it's the sponsor who's put the weight of money in rather than the members, the big volume. So trustees are going to vote anyway. But this move towards bond holding means bond holders don't get a vote.
Yeah.
So do you see that developing in time? Not to have a vote, but have an expression of wish in terms of bond holders in time. Yeah,
there's often crossover between the listed equity holding and the bond holding, same companies. We're focusing at the moment on listed equities, but certainly are interested in bonds as well and other assets. Private assets are something that are becoming more and more part of a DC portfolio as well, or conversation as part of a DC portfolio as well. So we have limited time resource focus at the moment. Listed equities is a pretty big ask, but certainly it's of interest going forwards.
Thank you.
Cheers, JQ. That's great. Sorry, Ed, back over to you, I guess.
No problem. So I've just got flick back across. So I've just got one more slide really, and then I can talk a little bit more about the platform if that would be interesting to people. So we have had two, and probably gets back to your question a little bit, Steve, actually, on how much are trustees considering these conversations at the moment. And we've had two very significant votes this AGM season, which I think has stimulated media interest, therefore starting to kind of enter into the public realm a little bit more, and certainly conversations across asset owners in the UK. And we've had some quite vocal asset owners. I'm kind of smiling a little bit because I know we've got Maggie on the line, but the Church of England have been particularly vocal, but USS and Brunel Pension Scheme, one of the LGPS schemes, and others have come out in advance of some of these key votes taking place and either saying how they are going to vote if they have the ability to vote, or in the case of Aegon, so one of the largest DC providers, publicly announcing their expression of wish, i.e. how they would like their fund manager to vote on these specific AGMs. So I won't go into the kind of the details of the votes too much, but in effect, you've got a situation where there's two proposals at BP, one of which was a shareholder proposal about climate change broadly. The other was voting against the chair to say that they've negated or regressed on some of their commitments to climate change, their transition to net zero in alignment with the Paris Agreement. And therefore, those asset owners were saying they think that their fund managers, or where they have the ability to vote, they're going to vote against the chair based on that reason. So this has generated a lot of kind of publicity, and it's generated conversation in the asset owner community or the trustee community, whereby if large asset owners who have the time and resource to really deeply research these companies and think about these issues very acutely are voting against the chair of BP or the chair of Shell for these reasons, should they also have the ability to have a voice on this situation. And I think there's been some really positive conversations about collaborative engagement and knowledge sharing. So people like Share Action talk about this a lot. Collaborative engagement in the US is a pretty sticky topic at the moment because it's sometimes seen as kind of conspiring rather than engaging for positive purposes. But more and more we've seen this kind of public declaration by asset owners of how they are going to vote. And we're really excited by that because we think it allows those smaller asset owners to kind of jump on the bandwagon in some senses, to leverage off the information that's being provided by people like the Church of England, like people like USS, and to hopefully allow that to formulate their own opinion. So I think that's, yeah, there's been a whole bunch of other votes that have taken place. And I guess the overriding message this year is that there has been less support for climate proposals broadly across this AGM season than there has been in the previous couple of AGM seasons. There's been broadly less support for shareholder proposals, full stop, which, depending on where your kind of viewpoint stands, could be seen as a bit of an issue for sure. And so if we think about how votes tend to go, it's, as Maggie pointed out earlier, 90% or so of the time votes go in line with management's suggestion. It's very few and far between that shareholder proposals break through the 20% barrier, which in the UK means that they need to be considered by the board, and certainly through the barrier to get implemented. And so we think that the ability to broaden out the type of people that are voting on these issues may start to have an influence and change that. And with that, I think I'll probably pause there.
It's really good. Ed, thank you very much for that. That's really good. Did you want to quickly go through a little bit on the platform itself? Did you want to try and do a quick live demo just to show what a member sees? Or I think you can do it, Ed. Come on, you're a lot younger than me, and if I can do it, you can do it. Come on.
We should be. Yeah, let's not be scared. Let's not be scared.
Let's not be scared. Come on, you can share your screen.
We are a tech company. Let me just grab up the right screen.
Take off the rugby club website for Cornwall Rugby Club or whoever you play for, and yeah. Here
we go.
You can share your screen with a live demo. I think it'd be really useful for members to see, for everybody to see this.
So this is so as I spoke about earlier, we integrate through various different means with the providers that we work with. It might be integrating into their app through APIs, or they might use our own platform. So this is just the most simple version of that platform. So this could be branded for the provider that we're working with, for instance. But if a member comes to our solution, this is what they would see initially. And I spoke about the different aspects. So we have the transparency piece and then the voting piece of the platform. So if I go through to my account, I can see all of the different underlying companies that I hold within my portfolio. And if we look at the most typical search on the platform at the moment, it's for Tesla. For whatever reason, Elon Musk's continued vocal discussions, I would think. So we can go through, we can see a little bit about Tesla as a company. I can click through to their Wikipedia page. I can see where their head office is. I can go through and visit the company website. If there was an AGM due to take place at Tesla upcoming, you would see that information here, or any open votes or results of votes that you have previously placed. So as I say, you can interrogate this page, for some providers, we're just providing this transparency piece. So Nest would be a good example. If you go to the Nest website, or if you Google Nest Tumelo, you can go through and see all of the underlying companies that are held within the different Nest portfolios that they provide to their members. They at the moment aren't providing voting technology, but they wanted to be transparent about which companies they hold and why. So this is the transparency piece. Most members tend to come into the platform, they spend a few minutes on this, they search around, they interrogate a couple of different companies. You can filter by industry, you can break it down by the underlying fund. So if you're invested in a default fund, it's typically a fund of funds, and then you can look at all of the different underlying funds within that default fund or the wrapper fund. You can search by headquartered locations, for instance. But most members come into the platform, they use this for about 3 or 4 minutes, and then they move into the voting section of the platform. And this is really where members would typically come back to. So I spoke about this earlier. We have all shareholder proposals that are coming up within those companies are displayed here. I've already filtered through. So these are all the proposals that are coming up. This is a demo site, of course, but would be coming up at the AGMs that are taking place. Members may not be interested in voting on everything, so they have the ability to filter by different theme categories that are of interest to them. I won't go into the asset owner platform now, but on the asset owner platform, which is displayed in a very similar way, we've broken down these categories into about 22 different categories. But for the member platform, we've kept it quite simple. So animal welfare, audit, defence and security, environment, equality, etc. And if I want to see votes only associated with those particular themes, I can just filter very simply. So let's do environment, equality, and animal welfare, for instance. And then I can see on last chance to vote, there are 2 votes coming up at Walmart. So I'll click into this one. So should Walmart report on the impact of its single-use plastic shopping bags? And we've worked with the FCA and other regulators to think about the language that we use. So we have a team of talented content writers, I think one of them is on the call today, who basically summarize the AGM document. I don't know if you've read an AGM document, but it's not the easiest thing to read, certainly not particularly engaging for a member of a pension scheme. So we surmise that statement and then provide the shareholder proposal or a kind of brief synopsis of that shareholder proposal, and then also the retort from the company. So the shareholders are saying globally 2 million plastic bags are used every minute. Walmart distribute a huge number of these. They have no policies in place for phasing out single-use plastic bags. And this is what Walmart have come back and said, which is we're committed to a vision of zero plastic waste. This is an unnecessary report and it's going to distract us from this vision. So anyway, we highlight the kind of core outline statements. If the member wanted to, they can click through and see the actual AGM document itself, or they can come down and vote. And like I say, they have a couple of different options here, but the question is, how would you like your fund manager to vote? In favour, against, or abstain? So I'm going to say in this case, I'm going to vote in favour. I confirm my vote, and it's been submitted through to their fund manager. I can also add some commentary, almost like a fund manager rationale for why they have voted. So I don't know, it aligns with my personal values, and then I can submit that. So that's the kind of pre-AGM. I've now placed the vote. This is how I would like my fund manager to vote at this specific AGM on that proposal. And then after the AGM has taken place, I can come back and see the results of all the issues that I voted on, or the results of all the votes that have taken place. And again, I can go through and search through those. So there's a vote at SSE, the energy company, how we view on SSE's pay policy. I can go in, again, this is just a demo, but I can see how everybody voted, both on our platform and then more broadly as shareholders. I can see that the outcome of the result and where we do receive rationale from the fund manager, which I'll be honest is not a great deal of the time, part of this kind of problem of transparency of why fund managers are voting in specific ways. We would also display the rationale for why they voted in that direction here. Final piece very quickly of the platform is our blog. So we really want to start to connect the dots. One of the important things, if we're going to vote, we want to understand what impact that vote might have, or what kind of issues are happening within stewardship more broadly at the moment. And so we publish a blog here which just brings some of those issues to light. So we'll do a roundup of the most important votes that have taken place. So the BP and Shell vote would certainly be examples of that, but more broadly talk about some of the other issues that are taking place within the kind of stewardship space for members to understand and read about. I think I shall stop there.
Asking the obvious, Ed. Sorry to interrupt. Asking the bleeding obvious. Presumably those votes go to the fund manager, and then obviously the fund manager's responsibility is to collate those votes and to submit. I get, but also to report back. Do you actually have any statistics? And I know that you're sort of a COVID baby, I guess, as a company. But do we see a line of growing interest, of growing votes, of growing, if you've got a master trust, say, with 300,000 members, are you seeing 30,000 members or, 1,000 members that became 5,000, that became 10? I don't know. What are you seeing? At least an upward trend in this activity? That would be really interesting to answer that question if you can.
So I think the honest answer is that we tend to see a continued trend, and like most things within the pensions industry, the launch is a really, really important moment in catalyzing that interest. So again, depending on the different schemes that we're working with, the different type of underlying company, we see differing results. Where we've deeply integrated into an app, for instance, is where we have some of the best results. For instance, when we started working with Cushion, we saw around about 20% engagement from members placing a vote, which I think is pretty exciting. The reality is there will be vote fatigue, and that's something that we're conscious of. If I keep going in and voting and I can't see any impact of those votes, or I'm not getting enough feedback about the impact of those votes, am I going to continue to do so? The answer is probably not. So two things that we've done to think about that more deeply. So one is the integration of vote policies into the platform. So I can now come in and select from a range of different policies, which will, rather than me having to individually click on each vote, I can select a vote policy which is representative of my expression of wishes, much in the same way that an asset owner might use a vote policy. And that is cast on all votes or all shareholder proposals that are taking place on the platform. And then I can come back in and retrospectively see this is how my vote policy has voted on these specific issues. So that's one thing. The second piece of the puzzle is very much what I was talking about earlier, with the ability for an asset owner to actually vote through pass-through voting. And that's, I'm kind of speculating a little bit, but that's the really exciting part of this, is where, as a beneficiary, rather than telling my fund manager how I want them to vote, I'm informing the trustees of my scheme how I would like them to vote, and they are voting either in alignment with that or not. There's obviously going to be differing views on the platform, and then the trustees can report back on that to their members. Because I think the really interesting thing about this, and it's why perhaps not particularly eloquently, but brought up the BP and the Shell vote, is that when we talk about climate change, when we talk about stewardship, when we talk about corporate governance, these are huge systemic global issues, and it's very easy to kind of get lost in them quite quickly. Whereas when you talk about individual examples of good stewardship or individual situations that voting has changed, so another example would be in the way that food is marketed within supermarkets. There was a shareholder vote at one of the biggest UK supermarkets. The vote passed, and then all of the other supermarkets fell in line in accordance with that. That kind of set the new standard. So where you have examples of good shareholder stewardship, and we can tell those good stories back to members, I think that's probably where we see another kind of whole layer of engagement and reason for them to keep on voting and to keep on thinking about these things.
Yeah, wow, that's good. Really, really good to hear. Really good to hear. Another question from me is, are you active in this sort of personal pension SIP space as well? because I'm thinking of providers like Hargreaves Lansdown, Curtis Banks, AJ Bell. Some of these SIP members have got $250,000, $500,000, $750,000 in their SIP. Is this a function that they could have, should have, or you'd like them to have, I guess, in that space,
All the above, I guess. Could have, should have, would like them to have. Yes, I think to all of those. We're currently spending the majority of our time in the kind of trustee pension space, although we are continuing to work with a couple of retail platforms. And so the SIP is a slightly different structure, where, let's say I've got a SIP and I've invested directly in a company through Hargreaves Lansdown platform. I would then have the ability to vote at the AGM based on that direct shareholding. And if in the future pass-through voting could happen within a SIP, they would also have the ability to vote on their pooled funds. So it would be that individual voting rather than trustees voting on their behalf. So I think definitely that's a place that voting can get to. I know Hargreaves Lansdown, Interactive Investor, AJ Bell, other platforms are looking at the way in which they can improve the proxy voting process on those direct equity holdings at the moment. I think Hargreaves Lansdown launched a product not too long ago to take it out of the kind of stone ages of getting a letter through the post and having to fill in an individual poll to having an online process, but not a huge amount of investors are engaging with that at the moment. So there's definitely work to be done in that space as well. And hopefully as voting becomes more of a common conversation, that will increase people's engagement with it, and therefore the kind of rationale for platforms like Hargreaves Lansdown to take up that type of service.
Yeah, no, I agree. And hopefully over time, using your experience in the occupational arena will filter into that arena as well. It's a fascinating space that we should take heed of, and trustee world definitely to decide, because we're talking about millions and millions and millions of pounds here. I mean, it's Maggie mentioned small schemes, but some people define a small scheme as under 100 million quid. So, that's a big number. So they should have voting rights and they should have a say, and trustees should bang on the table and they should, click to vote. I think it's a really, really nice piece of kit.
That's a great point, Stephen. I think ultimately money talks, and when we have a trustee who's representing a scheme of couple of 100 million or $1 billion in assets, or some of the big US pension schemes that I'm talking to representing tens of billions of assets, fund managers do not want to see that money walking out the door. And if they get to a position where an asset owner is saying, if you're consistently voting in a direction that doesn't align with our principles, either you need to give us that vote back and allow us to vote in the way that we would like it to be voted, or we'll go and speak to another fund manager that will. That then gets a little bit scary for the fund manager industry. And, I think maybe I framed a lot of this as, it's about creating better dialogue between the different actors within the stewardship process. So the issue is the underlying companies, the fund managers who are investing money into those companies, asset owners, and the ultimate beneficiaries. This doesn't always have to be a battle, but it's about creating better transparency across the board and giving more people the opportunity to express their opinion will hopefully start to generate some change. But that's, I spoke about it a little bit earlier, that's why individual members voting has a limited impact, because the representative asset is much smaller. If you take 1,000 members of one scheme that are voting, but there's another 9,000 that aren't voting, it's a limited number. Whereas if you have the trustees voting on behalf of all 10,000 members, that's a very different conversation. So money talks, I guess.
It always does. It always does. Well, listen, Edward, brilliant presentation. Hopefully a lot of you enjoyed what Ed's had to say and what Tumelo are doing. I'm sure if you'd like more information, then we can give you the presentation and maybe give you Ed's contact details if you want to find out more about Tumelo. It is really important stuff. Climate change is front and center on a lot of people's agendas, so really, really good presentation. So thanks for that. Assuming there are no more questions, we'll wrap up there. Thanks to Ed. Thanks for your input, Maggie. Thanks to JQ as well for your questions. Next week, we have got Derek Benstead talking from First Actuarial on the DB scheme liabilities and what to do. So if you're a sponsor or a trustee of a DB scheme, that could be a really interesting session next week. And the week after, we've got Sir Steve Webb, the ex-pensions minister. I'm squeezing him for his headline, but he won't tell me yet. So I'll have to find out what headline Steve wants to come up with. But there we go. So thanks for joining. Really enjoyed today's session. It'll be online this afternoon. All you have to do is log on to Pension Playpen Media tab, and the session will be up there for everybody to see. Ed, thanks again for that. That's really good. If you could stay on, Ed, for a minute, just want to ask you a few questions. That'd be great. And as we usually say, if you like Playpen, please share it. If you're not on Playpen, please register to use Pension Playpen. And we really appreciate your support through voluntary contributions. So thanks very much, and everybody, for attending. And as we always say, let's pray for peace in the East. And it's a shame that somebody turned back, but hey ho, these things happen. So thanks, JQ. Thanks for that. So enjoy the rest of your day. Enjoy the rest of your week. And we will speak soon. So Ed, if you stay on, I've just got a few questions. So thanks
Cheers,
a lot,
all.
everybody.
Thanks,
Cheers. Thanks. Ed, thanks very much for that, by the way. That was that's really good. Lots of clapping from Peter, Cameron as well. So Cameron Brown. So that's really good. In fact, I should have asked Peter Cameron Brown to comment, because he's actually I think he has about 7 DB schemes that they're involved with as a sponsor, I think. So yeah, I should have asked him what his opinion was, but I'm sure there'll be some good feedback in that space. So
it was
really,
it was useful to have Maggie there. I hope I didn't lean on her too much, but it's I've met Maggie a few times. She was part of the production of the AMNT Red Lines voting policy. She's been advocating for voting in pooled funds for a long time, so it was useful that she was on the call as a kind of friendly face and advocate.
Absolutely.
But it's I don't know what if there's feedback, but the challenge we have is that when I'm just talking about the ability for a member to vote, that's quite simple. When you're talking about asset owners voting, it's quite simple. I mean, it's a more complicated topic, but it's quite simple. Trying to merge the two into one presentation is always a bit of a challenge. So hopefully everybody kind of understood how the different stakeholders feed into that process.
Yeah, no, I understand. So if you could summarize in 1 minute, what was today all about? What is Tumelo all about? And what was the best question you had? I guess just a 1 minute summary. What would you say, Ed? What would you say?
I'm trying to remember now what questions I was asked. So today I really enjoyed getting to talk to quite a diverse group actually about the importance of shareholder democracy and the ability for a broader group of shareholders to feed into the stewardship process. So I spoke a lot about the different investment structures that allow asset owners or institutional investors on behalf of their beneficiaries to either vote at the AGMs of companies in which they're invested or not. And we strongly believe that shareholders should have the ability to vote on these big issues. Certainly the kind of big systemic issues that we're facing, be that climate change or gender equality or some of the human rights challenges. And really what Tumelo we're trying to do is provide technology to fund managers to enable them to glean those views from a wider demographic. So the 2 solutions I talked about for asset owners are pass-through voting, which is where rather than a asset owner delegating that view to the fund manager, they are literally voting themselves on these issues, or expression of wish, which is a term coined by the DWP, where asset owners are able to really, it's like a fund manager taking a temperature check. What issues are most important to you? How would you like us to vote on these issues? How do we take your views into consideration as part of our stewardship policies? And then finally, we talked a little bit about members, beneficiaries of pension schemes or of retail platforms who equally should be part of that process and should have an ability to express their views on these issues as well. And we have a solution that provides capacity for them to do that also. In terms of questions, I think there was we had an advocate on the call in a representative from the Association of Member Nominated Trustees in Maggie. And I think she wasn't really a question, more of a statement, but she spoke very eloquently about the importance of smaller asset owners having a voice in this conversation as well. She represents some very large schemes like the Church of England Pensions Board who do have a voice, but there are a long tail of asset owners in the UK that do not have a voice, and that's the real core group that we need to focus on.
Yeah, I totally agree. So thank you very much, Ed. That's brilliant. Absolutely fantastic. We'll post a video up later this afternoon. Good luck with your journey.
Thank you, Steve.
And as I said in towards the end of the presentation, that there may also be opportunity for the retail market. Because not only is it pension SIP, there's some people with ISAs now with over £1 million in ISAs. Well, crikey, why not?
I think I've met with quite a lot of like wealth managers representing either family wealth or high net worth individuals, and they are increasingly, those advisors or those platforms are increasingly being asked conversations about how's my money being invested, almost like from a philanthropic perspective. Like, I want to ensure that my money is having a positive impact on the world. So I think that conversation is definitely starting to happen more and more. How we get it down to the retail member is, there's both challenges from a engagement point of view, but also just like the technicalities of passing the vote down through all of these different levels through custodians and stuff. But it's certainly hopefully the future for us.
Yeah, well, the tech should be there to achieve that at some point, but I think it's coming. It will come.
Yeah,
So,
for sure.
brilliant.
Good
All right,
stuff.
Ed, thank you very, very much for that fantastic presentation. And yeah, I thought it was really, really cool. Yeah, if you could you send me the slides? Is that possible?
Yeah, of course. Yeah,
send me the
that's fine.
slides, so I've got them if anybody needs them. And then, as I say, I'll post a video up later this afternoon. But that's really, really cool. Thank you, and hopefully I'll meet you at an event soon, and
Yeah,
I could buy you a nice beer for your trouble, as they say. So, but it's really good session.
No,
Thank you very much.
Great. It's great to do it. I'll buy you one back for sure.
Oh,
Thanks,
thank you
Steve.
very much. All right, take care. Cheers.
See you.
Bye.